Hello everyone and welcome back to the channel. Look, let's be honest, we've all made some questionable decisions in our lives. Like that time I tried to make my own kombucha. Spoiler alert, it did not end well. But those choices usually only affect me and maybe an unfortunate houseplant or two. However, when it comes to the financial markets, the stakes are a tad higher, wouldn't you say? And no one embodies this hold-my-beer approach to economic policy quite like our old pal Donald J. Trump. Now I know what you're thinking, John, isn't this a bit dramatic? To which I say, have you met the stock market? It's basically a chihuahua in a Wall Street suit, easily spooked and prone to nervous defecation. And Trump's presidency? Well, that was like letting a very loud, very orange and somewhat sticky toddler loose in that chihuahua's pen. So today we're diving into 20 reasons why Donald Trump could be considered a danger to financial markets. From his past policies to potential future actions, let's break it down. Buckle up, because this could be a bumpy ride. Trade wars. The only thing easier to start than one of these is apparently a Twitter feud at 3 a.m. Tax cuts one day, trade wars the next. It's like playing economic roulette, but instead of a ball, it's Trump's Twitter feed. Remember that whole fiscal responsibility thing Republicans used to talk about? Yeah, neither does Trump's deficit. Chapter 4. Market manipulation concerns. Nothing screams stable market like a president tweeting about companies like a moody teenager. Title: Weakening the Federal Reserve's independence. Imagine pressuring a referee during the Super Bowl for better calls. Now imagine that referee controls interest rates. Terrifying, right? Title: Rollback of financial regulations. Deregulating Wall Street is like giving a toddler a chainsaw. It might seem fun for a minute, but it rarely ends well. A global pandemic meets a president who thinks herd immunity is a policy, not a public health disaster. What could go wrong? Defaulting on debt is like skipping out on your restaurant bill, except the restaurant is the global economy, and everyone's stuck with the tab. Some call it cronyism, others call it draining the swamp with a rusty bucket full of corporate favors. Remember when America was like the responsible older sibling in the world? Pepperidge Farm remembers. Why invest in your company's future when you can just inflate its stock price today? It's short-term thinking at its finest. Flip-flopping on economic policy is like trying to steer a ship in a hurricane. Someone's going to get seasick, and it's probably the economy. Remember Beanie Babies? Imagine countries fighting over those, but instead of plush toys, it's their currencies. It's like playing the stock market like a casino slot machine. Sure, you might win big, but the house always has the advantage. Aggressive foreign policy is like trying to put out a fire with gasoline. It might seem effective at first, but it usually makes things much worse. Low interest rates and a corporate borrowing binge? What could possibly go wrong? Spoiler alert, a lot. When the president picks fights with companies like they're contestants on a reality show, market stability tends to take a back seat. Rolling back consumer protections is like removing the safety rails from a roller coaster. Sure, it's more exciting until someone falls off. Massive deficits and trade wars? It's the perfect recipe for stagflation, which is about as much fun as it sounds. Because nothing says safe investment like a president who refuses to accept election results. It's not exactly a recipe for stability, is it? So there you have it. 20 reasons why Donald Trump's approach to economic policy might make even the most seasoned investor break out in a cold sweat. Look, I'm not saying the market is going to crash tomorrow because of these policies, but what I am saying is this. Trump's volatile leadership style, erratic policies, and disregard for fiscal discipline pose significant risks to financial stability. While some investors benefited from tax cuts and deregulation, the long-term dangers like debt, trade wars, and market manipulation could outweigh short-term gains. It's like using lighter fluid to start a barbecue. Sure, you might get a big flame initially, but you're also one gust of wind away from disaster. So what do you think? Did I miss any reasons why Trump could be considered a market risk? Let me know in the comments below. And if you'd like a deeper analysis on any of these points, just ask. Until next time, stay informed, stay skeptical, and for heaven's sake, stay diversified.